I'm trying to show you the truth. So critically important because it shows you what happens when a bubble pops, especially when a banking bubble pops, but you'll see it when I get started.
Welcome back to a critical episode with Lynette Zang. Today we're delving into a startling phenomenon, the mysterious disappearance of over 40 banks in China. What's really going on in the Chinese banking sector, and how could it impact your finances and future stability? Stay with us as Lynette unravels the intricacies of this alarming situation and its potential global repercussions. This episode is essential for anyone invested in their financial future.
So let's just dive right into this week's topic. And we're talking about China. So all of this was coming out. China merges hundreds of rural banks as financial risks mount. This move affects 2,100 rural banks. And this was back in January. So this is not something that's brand new, though there's a lot of things going on about the internet. What I'm going to show you is how this is just an example. This is a bubble popping. You think that after you do this merger that it's all over, but it's not. Let's take a look. One key solution to resolving the risks is through mergers and reorganizations. So taking those small failing banks and having them absorbed by the larger banks. But what does that really do? Number one, it makes control more concentrated, and it also makes risk more concentrated. Let me show you what I mean. So China's banking turmoil. 40 banks vanish as crisis deepens. The Chinese banking sector is facing a severe crisis, but this just didn't start just the other day. It's just an additional absorption of the banks. 40 banks disappeared, and the collapse of, pardon me if I butcher this, Zang Bank has further deepened the sector's problems. Experts warn that the situation could have severe consequences for the global economy. Why? Why does that matter for the global economy? Because the banking sector around the world, while we were talking about all of this deglobalization in supply chains, etc., the banking sector, the monetary sector, that continues even faster into a globalized world. And we are all incestuously intertwined. What we don't know is what's going to be the final straw that breaks the camel's back. We talked about that before, but what I love, whether you're talking about China or South Korea or the US, is the public is waking up. That's what we need, is the public to wake up. By buying gold, the money is still with you in a different way. Yeah, it holds your purchasing power intact. It is the only financial asset, not one of two or four or whatever, the only financial asset that runs no counterparty risk and makes you immune to political manipulation. I don't know, you think the whole world has any of that going on right now? What it really does is it protects your freedom. We need to be as independent as possible in these times. That's what makes community so important for all of us. But the Zang Bank of China goes bankrupt. Customers demand their money back. What are you going to do? Scenes of protests and demands for refunds highlight the deep-seated mistrust that many people have in traditional banking institutions. We are talking about China here in particular, but coming to a theater near you. This is what happens when a banking crisis, when that bubble pops. And if you don't think that we're having that all around the world, think again. This is a debt-based system. It is a con game. And in any con game, you need new money. You need new consumers. You need new participants. Perceived or actual weakness of a bank. So that creates uncertainty and fear. Withdrawals, confidence is lost. Once confidence is lost, it is almost impossible to get back. And we're looking at this happening in the most controlled country on the planet. Because if you think that that consolidation only happens in China, well, here, the U.S. banking system, the great consolidation. And this takes us through 2023. And let's look at that because this is significant. So larger banks gobble up smaller ones. This happens all over the world. And again, it's a consolidation of power. I mean, we know the top banks, right? It's a consolidation of power and also a consolidation of risk. So back in 83, there were 14,469 different banks and 40,000 branches. Well, today there are, or through 2023, so it's lower today, 4,135 banks. But their branches have gone up. Can you see how this power has shifted? But that peaked in what? 2010. Now we're transitioning into a digital system. And so the physical footprint of banks and your ability to go in and talk to somebody is diminishing. How do you feel about that? Because every failed bank that falls into the hands of the industry's giants like JP Morgan, Bank of America, 2008 was not that long ago, though I know there's a lot of people out there that were not in the markets during that time. But it's a consolidation and a concentration of power and risk. This contributes to, this is decades-long consolidation trend. Now, there were 87,000 branches in 2009. Now there are 71,190 branches, and that is shrinking more. So what do you do? Like those people that were involved in fintech that have their bank accounts closed, there's no physical presence. Who you complain to? Nobody. There's nothing you can do. I hope you can see the importance of holding your own money, your own wealth. The fewer banks, the more concentrated control and the greater the risk. So here, Chinese government bonds are on fire. That's ringing alarm bells in Beijing. Okay, what do they mean by that? Well, first of all, remember, if you have a lot of buying, then that pushes interest rates down. So the fear in the banking system is a rush to safety into government debt. I'm making a face about it because, honest to God, you're rushing out of the frying pan into the fire, because what do central banks and governments have that corporations don't? That's the ability to print this. That's what they have, and that's what they use. Interest rates and money printing. And they use that to reduce the purchasing power of this. You guys know I have $100 trillion Zimbabwe note. Know what I can buy with it? Bupkis. Absolutely nothing. So let's go back to these government bonds, because is that really a true flight to safety? I don't think so. Lower borrowing costs should be welcome in an economy struggling to recover. I want you to listen to how much and how the banks and how the markets are responding here, and see if you can't find some parallels, because I see lots of them. This being one of them. Lower borrowing costs. So markets are rising because the Fed, they're counting on the Fed to pivot and lower interest rates so they can borrow and spend even more. And that increases their debt levels, but also it makes it appear they're more profitable. So from a property crash, sluggish consumer spending, and weak business confidence. But the sharp move in bonds is sparking talk of a bubble and triggering acute anxiety among China's policymakers who fear a crisis similar to the collapse of Silicon Valley Bank. That's what all of this absorption is about. They want you to think that that banking crisis that happened in 2023 is over. But we've already seen more banks in the U.S. fail and taken over by private equity. I mean, honestly, this is a joke. Become your own central banker. Buy physical gold and silver and hold it. That's what you got to do. But money is rushing into Chinese government bonds, sending their prices soaring. Remember, I show you this? Okay, sending their prices soaring right? And yields plunging to record lows as investors hunt for a safer alternative to the country's ravaged real estate market and volatile stocks. Now, the real estate decline is happening in some places, not all places in the U.S. here, but it is underway. Make no mistake about it. Even though consumers came out and, they bought a little bit more, it's still way off. And what we're seeing are defaults soaring. Please, because even in China, gold has delivered sizable returns in the first half of the year and outperformed most asset classes. What's above it? Crude oil, right? Which is another controlled substance, commodity, and the S&P 500, because it has to make things look like the stocks are going up. You've got to be aware of what's happening, because after all, how many times can you be lied to when you do not know the truth?
Thank you for tuning in to this urgent episode with Lynette Zang. The abrupt vanishing of numerous banks in China poses serious questions about the global financial landscape. If you found this deep dive insightful, give us a thumbs up and subscribe for more critical updates. We're eager to hear your thoughts and questions, so please leave them in the comments below. Stay vigilant, stay informed, and we'll catch you in the next crucial episode.